So the session is being recorded. And so welcome to the ROI of Win-Loss Analysis, Reflections from Two Veterans. And I'm delighted to introduce August Jackson and Alan Naylor. But before I do, a few words about the Council, which is supporting this. And so the Council of Competitive Intelligence Fellows is an educational nonprofit. Our mission is to sustain and foster the CI discipline and practices in service to the profession and in service to the professionals. So we serve as roles as ambassadors, mentors, champions, and educators throughout the intelligence, the competitive intelligence and related communities. Our members span the globe, and I do want to mention that we are in the midst of our, or towards the tail end of our nominations process right now, and so the deadline for nominating new fellows. And so please check our LinkedIn group, where there are more details about that. And we look forward to selecting fellows for the 2019 and announcing that later this summer. And so to our esteemed panelists, I want to introduce August Jackson, who's a Senior Director of Market and Competitive Intelligence at Dell Tech. And August, however, has brought a number of experience in a number of areas. So in addition to his role at Dell Tech, where he's leading a competitive intelligence effort there, he's also spent 6 years at Ernst & Young, guiding the organization's senior leaders on the impacts of digital technology. And he's also had over 10 years of service in the telecommunications industry, as well as working with government agencies. So he's considered a bridger across a number of these different areas, and his perspective will be fantastic as well. And a word of note too, August hosted the first podcast dedicated to CI, and so he's a pioneer in this area, and we're delighted to have him as fellow and as our panelist. And Ellen Naylor is the president of the Business Intelligence Source, and she's one of America's pioneers in competitive intelligence in general and in win-loss analysis. And she initiated Verizon's first CI program in 1985, and since that, she has been pioneering in other aspects as well, among which she's written the award-winning book, Win-Loss Analysis: How to Capture and Keep the Business You Want. And she's won a number of awards from SCIP, served in various capacities in the CI community as well. And currently, she's also on the executive committee of the Council of Competitive Intelligence Fellows. So we're very proud of having her as well. And so with that, I want to turn this conversation over to August and Ellen. I'm going to be lurking, and I will be helping out with chat, reading your chats, and so I do encourage our attendees to participate in the chat. Also, there's a Q&A button too in your control panel, so you can pose questions there. And if need be, if you like, I'm also happy, to bring you in on the conversation via audio. So, please, just be aware that we have that option too. So, over to you, Ellen and August.
Well, good morning. Where do we begin, August?
I don't know. I think you and I could probably use way more than an hour to share our experiences with win-loss analysis and some of the lessons that we've learned. But I always think a good place to start is with a why. And so, for anybody who might be new to the topic of win-loss analysis, why would somebody want to do this?
Yeah, that's a very good question. Well, it's the point of ROI. It's the point really of finding out what's important to your customers and to your sales force along the way. And in a lot of companies, that's really missing. And you do win-loss after the buying decision has been made. So it's like it's perfect timing. Mm-hmm. This person knows you're not selling to them. You're there to listen. And they will talk and talk and talk. I often tell them we have a half hour, and they often go for 50 minutes. It's not because of me, it's because of them. Because today people don't get listened to.
Right. Yep, absolutely agree. That benefit of actually going out right after the opportunity, making it very clear when you're talking to the customer that you're not there to sell to them, which makes them much more willing to tell you what your organization did well or didn't do well, what the strengths and weaknesses of the product were, what the strengths and weaknesses of the competition's products were, all that information that's available to you, from a source that is evaluating it based on the fundamental need. They're usually a business need, at least in the business context where I operate. So you can begin to get that view of the competitive landscape, the customer's need, and how your organization and the competitor's organization are or are not aligned with that need, almost in a way that no other business practice does. I really find, and I've said this many times, that the return on investment of win-loss analysis is immediate, and is certainly probably the highest of any competitive intelligence function that I've ever had the pleasure of being involved in.
Right, that's true. There's research behind that, actually, that companies that have a regular formal program that they do it quarter after quarter actually can realize a win rate 15 to 30% higher over time. There is research behind that by Anova Research. So your point is well taken. You know, there's two other things I think that are good reasons to do win-loss that aren't always so obvious. One is you realize how the customer perceives you and perceives the competition. That isn't necessarily how you're advertising yourself. And so a lot of times people complain, oh, but we do that. That doesn't matter. That's not what the customer thinks.
Right.
And the second area, I think we talked about this too, August, is the whole area of product development. It is a gold mine.
Mm-hmm.
And a lot of times that could take a half hour by itself. So I will often say, oh, wow, you really seem to know an awful lot about this and have great suggestions. Would it be all right if you had a conversation after our conversation with our director of product development? Mm-hmm. And those work out pretty well too.
Yeah, so you mentioned the benefit of the improved win rate, and certainly that's one of the key benefits I've experienced with the win-loss programs that I've been involved in. Another benefit very related to the product development benefit that you're just talking about, Ellen, and I could share lots of stories about this, is the input into business decision making. Mm-hmm. Because very often capital decisions, those decisions that are very expensive, that are difficult to undo, that have long-term implications, strategic implications for the business, sometimes those decisions are being made on very limited information. And win-loss is a great source of, I would say, much harder, clearer guidance on what's the right path to take in some of those decisions. So, one quick story from my time at British Telecom, which we had such an amazing win-loss program there, and it was my first time doing win-loss, where I really got sold on the concept. We were in a very capital-strained situation in the recession of the early 2000s. And we did see that through win-loss, we discovered that we were losing some major global network opportunities based on our lack of a secondary network connection in one major European city. So we could relate this, $100 million euro revenue gap to a 250,000 euro investment that we can make to close that gap. So being able to make that decision based on that kind of information was very powerful.
Absolutely. I have one that just came up last week, that the customer is losing their backside big time in the cloud, and because they aren't supporting a certain product. And every salesperson I've talked to said, we have to get into this space. And a decision was made at the company, and will be made at the company, I am certain, to change who they're supporting, we'll just say, without giving away anything. But it's just amazing. And there was one customer who I really appreciated his comment. He was very strategic, and some of them are. And he said, companies need to put a mechanism into place where they listen to what field sales is saying, as well as their customers. Those tactical ideas should be put towards strategy. They're not all good all by themselves necessarily, but take them in the context of forming your strategy. And I thought that was very insightful of him.
That is really a great example, and I love that bridging of the tactical to the strategic as well, because sometimes people might look at win-loss analysis and think about it as a purely tactical, sales enablement activity. But the strategic implications, if you do it well and do it over time, are particularly impactful, because you're getting into some of those patterns of why you're winning and why you're losing in the market can tell you a lot about the strategic changes that you need to make. In a business to business context, pricing strategy alone is one of the great benefits of a really excellent win-loss program that's conducted over time and develops that time series data set.
Right. And for people to understand your value proposition that goes right along with that price. What's the whole thing? Where does pricing? Why does it matter? How does it even incorporate it into win-loss, into your decision making? How important is it, to be able to delineate the type of customer that is price sensitive? The other thing, which is very tactical but so important, is time management. Salespeople need to know which opportunities are good and which ones to run from. And so I really enjoyed that conversation I always have with sales before I talk to their customer, to learn, A, is this even worth pursuing? But B, if we do pursue it, what do you expect we should learn from it that you don't know today?
Oh.
And so we go down that path a lot of times. Gee, what other opportunities do you think are out there to sell to this customer that you suspect they might be open to, or you've been trying to get at, So we include that as part of our questioning, so we can help sales out on a very tactical level. So it's a very interesting, win-loss analysis is a very interesting process in that it's squishy. You get to define it, you get to create it with every single phone call you make. And I feel like I learned something new, and I've been doing this since 1989 with every single phone call I make. You never can learn it all. There's process to learn. How do you get those darn customers to agree to an interview? That is my biggest challenge today in 2019. It didn't used to be. It is today.
Why do you think that's the case?
I think people are busy. They don't want to take the time. There's a lot of reasons why they don't do it, but I think the biggest one is time. And sometimes they don't want to deal with it either. That's probably it too, When you look at who you talk to, who's your losses, for example. But a lot of times I find also, on the other hand, that's why I say it's a very individual thing. Every call is a unique opportunity. And you really need to take advantage of that, how to connect. And, with some of them where the deal is lost, but they've been your customer for 5 years, for example, they feel very bad leaving you.
Oh, yeah.
And boy, will they tell you so much good information because of guilt. I hate to say it, but I think that's a lot of it. They feel bad. Maybe guilt isn't quite the right word, but they feel bad about it, Whereas the wins, a lot of times, you think, oh, they're going to tell us how great they are, and sometimes they absolutely do. But a lot of times, you didn't win by that much, and you thought you did. You thought you had it in the bag, and they were looking at another competitor. And I had one where they were actually, in the last 2 weeks of negotiation, didn't like the way the negotiation was going with procurement, the two companies. It was really dicey, is the right word. And so they almost went to the competitor in the last 2 weeks. And this negotiation had been going on for an entire year. Wow. So it's really interesting what you learn, I find. You just have to be open to it, right?
Yeah, absolutely. Yeah, so I think we had a great discussion of the why, and I feel like we're kind of segueing a little bit into the what of win-loss. So Ellen, if I could put on my interviewer hat and my former podcaster hat and turn this back to you, from your perspective, what are the elements of a win-loss program that's really worthy of the name win-loss?
What's worthy? Well, I think just basically learning information from your customers and your sales force that you don't learn from any other source. Because the timing, as we said earlier, of the call is so good. And then in turn, taking those results and feeding them to other areas of your company. So for example, into battle cards for your sales force, up to product management, over to the executives. I know I have one customer where every single win-loss report I write goes to their head of sales right away. The whole thing, not just a summary. So, just making sure it's disseminated and then taking action on it, because dissemination's great, but if you don't do anything with it, you might as well just stop doing it, right? So why don't you share your experience, your thoughts?
Sure. So, well, I actually like the fact that you start with talking about the conversation, because I really think that that connection and conversation with the customer and with the frontline sales force is really the foundation of good win-loss analysis. And particularly getting anecdotal feedback on why the business is doing well versus not doing well. But over time, a systematic program of win-loss analysis, even on that anecdotal level, does become data that can be used in the business. So the interview piece is really quite foundational. One of the things that I took away from Rick Marsette's book on win-loss analysis, he had written a book similar to yours when I started at Deltec, and I was leading the competitive intelligence function, and I knew that win-loss was going to be a component of this. I knew that I had to sit down and reread your book and Rick's book to get the best of those two sources of information. Rick's focus for win-loss was on customer relationship management and capturing win-loss data, I would say at volume, in a CRM system. And I was blessed to be coming into an organization where they have a CRM system on board, and the sales force really takes that as one of the core tools that they use to do their job. And so, over time, I've had the opportunity to work with our team that manages that CRM system to make sure certain questions are being asked related to our opportunities. So balancing out what I call the qualitative insight from those interviews with the reps and the customers, and also leveraging that with the quantitative data. It's quantitative in terms of the fact that it has numbers associated with it, and it's also quantitative in the fact that there's a lot of it, because we are an organization that goes, that is involved in a number of pursuits over time, way more than we could ever hope to talk to. So it is a sort of supplemental insight that we get into who we're coming up against, why we're winning, why we're losing, those sorts of things, that is now coming back as a data flow from our CRM system that can help guide and inform who is it we want to go talk to in terms of our customers and our sales force, and what specific questions do we want to take to them when we try to engage in those conversations.
So your CRM, though, is just populated by sales, right? There's no customer data in there. Is that correct?
That is correct.
Just so people understand the difference between a win-loss review, which is what Rick Marsette's excellent book, which I endorsed, is all about. And what was so powerful about that is the volume, huge amount of volume. And he even wrote in a formula to take into account the bias of sales as well. But his whole point was, hey, let's get that data in there immediately, soon after the sale, like right away, have that be part of the sales process. Pop it in there, man. And he had contests going with it. I mean, very, very successful. But that is not what the customer's saying. But my point is, you want both. So, CRM really enables that today, as long as your sales force actually fills it in accurately, which is often a challenge. But at least it's better than nothing at all. You have something to have your legs on, because most of my clients pop that over to me as well, the Salesforce data. And, a lot of times it's pretty close to right. But that's why you talk to sales before you talk to their customer. You at least are armed with the CRM data. And so you have their opinion about what they think happened. And so that's great. So.
In August, we actually have a chat here, entry that has an observation and a question from Parmalee Eastman, our colleague in CI practice. So she says, I've done low 5 figures win-loss projects and seen 6-figure projects. The more expensive projects return significantly more information than the less expensive project. Both returned high ROI. Maybe the extra investment collects strategic as well as tactical information. How should organizations decide how much to invest in win-loss?
August, that's to you. After all, you're paying the big bucks.
Yeah, it's a great question. and one of the key determinants I think is sales volume, and how much the organization feels like they need to cover or sample from that sales volume. I've been in organizations, or I've supported organizations that could literally do a win-loss interview with every opportunity they pursue, because they only go after very few opportunities. They're very large. Maybe the sales cycle is very long. Those organizations probably also invest in a lot of things like black hat exercises or war games leading into those big pursuits. And of course, some organizations have really, really excellent sales gating processes in place, as well, and criteria for what the opportunity lead needs to deliver in terms of information about the opportunity, for the opportunity to make it to the next stage in sales cycle. And Ellen, before we started the podcast, I'm going to call it a podcast. Before we started the podcast, you mentioned something about the customer journey and those sorts of things. And so, that customer sales journey, some organizations invest quite a lot in that. And those organizations are probably very likely to, like I said, go after relatively few very large pursuits. And so they might want to invest in a win-loss as part of every pursuit. And then other organizations go after so much business. The idea of running the table on every opportunity they ever go after is just really not economically feasible. Win-loss would probably become their core business beyond sales if they try to do something like that. So they have to decide, okay, how big of a sample do we need? And then part of that will be determined by how comfortable they are with, let's say, indicative information, as opposed to, are they sort of like data and information completists? And they just, the organization has to decide where they fall on that particular spectrum. And then, once they've made that decision, think about, okay, what sort of team and resources, what sort of external vendors what sort of contract with those external vendors might we need to have in place for us to be able to execute to achieve those goals, maybe overachieve those goals a little bit to get to where we want to be with insight from win-loss. And I know, Parmalee, I'm not answering your question specifically, Y equals MX plus B in terms of calculating the investment, but those are some of the criteria I would suggest as certainly the starting points to figure out what sort of investment win-loss analysis an organization should make. Alan, I'm curious if you have a perspective on that.
And my perspective has simply been this: what is your objective in doing win-loss? What are you trying to learn from it? What products are you trying to cover? What issues are you trying to resolve? That should be what is your guiding factor rather than a dollar amount. It's, what are you trying to learn? What are your problems? Where are you trying to grow? Maybe you're wildly successful. You want to be more successful. That should be your guiding tool than I want a $10,000 or $50,000 program, whatever it is. You don't want to, you want to have a budget, but you should first think about what it is you're trying to accomplish and why.
Yeah, that's a great reminder. Always linking it back to, what is the purpose this is going to serve? How is this going to help us make better decisions? Those sorts of things. Yeah.
Are there any other questions before we podcast on, August?
Not yet. Feel free to podcast on.
All right.
Okay.
How about if we talk about getting sales buy-in?
It sounds like a great topic.
Yeah, it's a really key topic. Do you want to start, or you want me to?
I can go ahead and kick it off because I think we're both on the same page about really the importance of getting sales buy-in for win-loss analysis and win-loss collection. Quite honestly, they're one of the most important stakeholders inside of the organization for win-loss. Obviously, they're a very significant participant. In most instances, you're going to be talking to the sales reps directly. There may be some level of permission involved in getting sales to agree to let you talk to the customer. Some organizations might take a different view of that, but everywhere I've done win-loss and had success with it, there was that element of the actual reps buy-in of having you go and talk to the customer as well. It's important that they feel comfortable with the purpose of win-loss and that they understand what it is you're trying to do, how the information you're providing them is going to be used inside of the organization. Because sometimes I have had the experience where a rep is experiencing win-loss for the first time, and they're worried, is this some sort of performance evaluation about me? And it's very helpful to, in those instances, put the conversation you're trying to have with them into the context of what it is you're trying to bring back into the business, and how it's actually a conversation and a program that can help them, as opposed to being something that is in place to evaluate them as individual salespeople.
Those are all good points. They are your link to your customer, and that's probably the first point. And you want them to explain to you how they left it. How did you leave it with this customer? Who's the best person who I should talk to based on what it is we want to learn here? Who do you think is going to be a little more chatty of those two people? We want someone who's going to share with us, who's more apt to share with us.
Mm-hmm.
So I always ask those kind of questions. The other one is, I think what you're alluding to is timing. Timing is everything. Sometimes they're in the middle of another big deal. I just had one come in this morning. No, please don't call this customer. We're in the middle of a complex negotiation. And I'm like, well, that's fine. We will not talk to your customer, but maybe give us a time frame that we could call you back, because it sounds like this would be a great one to call, but maybe 3 to 6 months down the line. That's fine. We'll hold it off and honor you. And what is it you would like to learn? You, Mr. Salesperson, because part of the deal is this is a marketing touch point. You're not just doing win-loss analysis. If you can, you're helping sales.
Mm-hmm.
You're helping marketing at your company, and so sometimes some opportunities come up that sales didn't know about, or maybe you can make that opportunity a little sharper for them.
Mm-hmm.
And the only way to really learn about them, that, in my opinion, is to ask them. So those are a few of the things that I would add to your conversation about getting their buy-in, because they are often paranoid about you calling in, and me as a consultant even more so.
Right.
Oh God, brought a consultant in. Oh dear. And I generally get over it pretty quick because I used to sell for a living, so I understand what it's like to make a living selling. I did it for several years, and it's a tough way to make a living. Mm-hmm. It's not cakewalk, and it's not gotten any easier. And they appreciate that I have had that experience, and that's helpful. It's actually quite helpful. That alone has a lot of them. I could just hear their tone of voice change. Oh, yeah. So it's helpful to actually have the person who does the interviews be someone who has sold for a living.
Mm, yeah, that's a great point.
Not essential, but helpful.
Mm-hmm. Yep, absolutely. And sometimes, to that point, sometimes you can actually. I'd be curious about your experience with this, Ellen. Pivoting to the engaging the customer and what's the best way to do that. Do you ever take a rep on an interview with a customer with you, or do you look at that as something that you prefer to take on your own?
Well, the customers that hire me do not want sales involved when the customer and I are having our conversation. And the whole reason is they're looking for an independent third-party approach. And that's and just the listening of a third party. And I'll even tell the customer that, because a lot of times they think I work for the company. And something will come up and they'll say, do you know so-and-so? And I'm like, well, no, I don't. Even though I've told them in the email I was hired. People are busy. They don't remember all that stuff. And that's fine. I'll tell them, no, I've actually been hired and I'm working for the company. I think they're a great company, but I'm not an employee. And a lot of times they'll say, oh, well, I really didn't want to say this. That's what ends up happening within about 5 minutes. It's very interesting. So they tell you things as a third party that they will not tell someone in the company. Mm-hmm. And that includes not just sales, anybody in the company.
Right.
And that's the reason why a lot of people hire independent third parties to do interviews, just because there's more gushing that happens, It's like, oh, I have someone to talk to who's not part of this,
Yeah.
So,
yeah,
absolutely. I think I saw a question from Andrew. Did I? It seemed like a really good question. Would you repeat it, though, because people probably didn't see it, Cynthia?
Yes. So he says, what happens if the sales force only serves you a biased view by selecting just losses? that happens?
Well, in my case, I get losses and wins. A lot of customers, not just salespeople, but people in marketing, believe they can learn most from losses, and they think they know everything there is to know about wins. And yes, August is laughing because you actually learn much more from your wins than your losses, because how are you going to learn about implementation and all those customer service aspects of your sales cycle if you just talk to losses? And from losses, you'll learn why you lost the deal. You'll learn if you could ever have done anything to win it. A lot of times you find that probably not. You were in the game late. Your product wasn't what they were looking for. Someone had a bad experience with your company in the past. It's really interesting, the things you learn that are really more emotional reasons. And the other thing that you have to watch out for, speaking of bias, Andrew, is the salesperson, of course, has bias when they're telling you their story about how they left it and how it is with this account. And you have to factor that in as best you can as an interviewer as well. But what's so nice is we interview full time, and so we're kind of used to bias, and so we can sort of sniff out the sales bias as we get into this. But what I've noticed is if you're just kind of laid back about it all, and they can sense you're not judging them, they're apt to be less biased than they would be. If that makes any sense. What's been your experience, August? Because you talk to sales all the time too.
Yeah, I feel like maybe it might be an aspect of the culture in the places where I've done win-loss, but I've always felt like I was getting relatively, straight shooters when I was talking to sales. Of course, I'm applying elicitation methodology, not necessarily taking immediately what it is they're saying as the final answer, but certainly as like the jumping off point to that conversation to understand, okay, well, let's peel back the layers on that a little bit, and let's see what's really going on here. If you're hearing about, price, and this is the stereotype: we lost on price and we won because I have an excellent relationship with the customer. And so you can sometimes expect to have that as being kind of like the opening point of the conversation from the sales rep side, and then begin to have open up and ask some deeper questions about, okay, well, tell me about the bid process. Where did we come in versus where did we end up, and where did the competitors go, and what did that look like? And then you begin to get some insight about, well, yeah, we were more expensive, but the competitor came in with a product that was better suited for what the customer ultimately wanted, maybe something a little less expensive. And so was it really a matter of price, or was it really a question of needs assessment? And then, sometimes reps will start to reluctantly open up, well, yeah, actually it was, it's this thing. And, we, hear about sometimes pressure internally to, push a particular product. And you can elicit that out. So I assume there's bias going in, apply some elicitation methodology, but I also feel like if you've got a good relationship and you're building that connection with the rep or with the customer, that you can get to a point where you can get behind the bias that might come out in any initial reaction or response to your questions.
Mm-hmm. And frankly, I have also had interviews where I realize they're so biased. There is no way we're going to get good information from them. And I will cut them short.
Do you usually find that on the customer side or on the sales side?
On the customer side. The salespeople are a piece of cake. I 5 or 10 minutes as a salesperson, we're fine. But it's sometimes the customers. They're just so biased one way or the other that what they're sharing with us is not going to help us. It doesn't happen that often, but every now and again it simply does. And I can just tell they're going down this road. I don't want to waste my time. I don't want to waste theirs. And I'm not going to charge a customer for this interview because this one is trash. So.
Ellen and August, actually, this feeds right into a question we just received from two of the panelists, asking, when dealing with non-objective information, like the one the customer shares with you, what level of credibility would you provide it based on the fact you want to use this information as feedback in the organization?
Non-objective? I'm not quite understanding the question. Are you, August?
I think it's related to the point about bias, but Cynthia, maybe you have a read on it as well.
And actually, if we maybe I can just open up the conversation with this individual and allow this person to pose the question directly. Oops. And so you are, So you just have to unmute yourself and you can pose your question.
And this was like the question comes from Guy.
Yeah. So perhaps he's in a place where he's unable to.
Maybe he's using his phone.
Yeah.
I wish I understood the question because I just don't quite. Non-objective information. The system doesn't import voice. Oh, that's too bad. Because I just don't quite get the question. I'm sorry.
Yeah. So another way that perhaps dealing with subjective information, right? Because when customers are sharing with you their perspectives, it's often subjective, and so maybe looking at it that way and asking what level of credibility will you provide the information that customers give you, given that it's subjective.
Oh, that's a good one. Yeah. So at the end of the interview, do you believe what they actually told you? Yeah. That's a really good point. I tend to believe most of what they've told me because the interviews go long enough that they start repeating themselves. And if you're lying, generally speaking, they forget and can't repeat themselves. So when you notice trends of what they're saying and they're coming back full circle, a lot of times I figure they're probably telling me the truth, and most of the time they are. I find that the people who are even willing to be interviewed tend to be more apt to tell the truth than not. It's a little self-selecting that way. They have the time to give you. They chose to give you this time, and they're so glad to actually have someone listen to them. If that makes any sense, that balancing sort of thing.
Yeah,
sorry about that. And maybe by extension of that, and you can also address that, August, that when you are dealing with this subject information and you're bringing it into the organization, how do you frame that so that people understand the subjectivity and not just take it at face value as well? So perhaps you could each answer that.
So for starters, in terms of in the actual conversation, Ellen, definitely agree with you that when you start to hear the customer or the sales rep repeating similar themes throughout the interview, that gives you some clarity about the truthfulness of what's coming behind that repetition. Mm-hmm. And a standard elicitation technique is to ask the same question multiple ways, mm-hmm. and get some of the supporting detail around that as well. I do find, as I was mentioning before, most reps that I talk to, and certainly most of the customers that I talk to, I generally get a very real sense of honesty from them. And Ellen, you're absolutely right. They love to, the fact that somebody's listening to them, mm-hmm. as well, and also not trying to sell them or push them into a decision is also kind of rare in this world for some people. So they really appreciate that opportunity as well. So I've tended to regard the fact that, yes, the information you're receiving is subjective as kind of a given, and that there are a couple of points where you can get to more clarity on what is the, if there is such a thing as objective truth in business to business sales, what is the objective truth behind what the customer is saying or what the sales rep is saying. And then in terms of reporting it, Cynthia, that's a great point as well, because of course the value of doing this win-loss is then bringing these findings and these customer perspectives and customer need statements and things like that back into the organization. And recognize that in those conversations, begin those conversations with some clarity around some of the challenges of what sort of information comes back from the source. And I find that most executives that I've presented win-loss findings back to understand that there's a level of subjectivity to what they're hearing. They understand that very often there's a knowledge or an information gap. So for example, I think, Ellen, you said before, product marketing or product teams will get upset to say, well, the customer's saying we don't have something, but we definitely have it. But, most organizations will begin to realize, well, I understand maybe we haven't done a good enough job in our marketing or our sales messaging, that they don't know that we have that or that we can do that sort of thing. And so they will take that on if you present it appropriately, that the customer is also living behind this kind of veil of subjectivity when we're marketing and we're selling to them as well. And it speaks to the fact that sometimes we as an organization need to do a better job communicating to the customers when the opportunities arise.
Right. Thanks, August. And we've got questions rolling in, actually. So
let's go to the next one.
Pardon me?
Let's go to the next one then.
Yeah. So a follow-up from Guy, actually. This says, is win-loss better handled from the outside or inside the organization?
Well, you get to decide as the person who is in charge of win-loss. But I'll give you the pluses and minuses. The plus of doing it inside is there's nobody who knows your product like you do. Nobody who knows your market like you do. And you know all the players in your market, in your space, in your company. You're reading all the industry analyst report, you're breathing it, you're smelling it, you're sniffing it, you're touching it, you're sensing it, right? And the company is paying you your salary no matter what it is you do. So there's not an incremental cost to having it done in-house. Of course, there's other work maybe you'd rather be doing than win-loss. That's the big decision to make, right? Outsourcing it, the value of it is, the negative to it obviously is it's going to cost you money because nobody does it for free, right? Most of us are not independently wealthy. But you also get a level of neutrality and independence from what the customer is willing to share with you. And that often is very worthwhile as long as the person is talking to understands your space well enough. They don't have to understand all the ins and outs. What's probably the most important thing is for them to understand how business is conducted in your space. How is the sale made? How is it marketed? How does product development work? They need to understand how business is conducted. In fact, I'd rather have someone do that than someone who knows my technology in and out. Because in win-loss interviews, generally speaking, the reasons, even in the tech world, which I mostly work in, the reasons you win or lose deals is not some little detailed technical detail. It's usually pretty broad, pretty major. I could probably even understand it if I didn't study their space, but I always do study their space. But my point is, it's business. And the customers do gush to us outside people. And we also just interview all day long. That's what we do. And people in the company oftentimes, they don't interview all day long. In my case, I've had 15 years of cold calling as my training to do with loss analysis. Well, elicitation, I don't even think about elicitation anymore. It's I just don't. It's just second nature. So I'd say those are the kind of the pros and cons. And August, you, I'm sure, have a perspective as well since you've been involved in several programs.
Well, I think you summarized the positives and negatives of both options really well. I don't think there's anything more I could add. I agree 100%.
Well, that brings us to the next question then. So we have a question here that's, pardon me. We have a question here that says, from Sharon Sturger, that says, are there particular CI methods that partner well with win-loss analysis? These might be methods that would provide a more robust picture of the information gathered through win-loss approach.
So in terms of other analytical methods that you might apply, So one author is value chain analysis and understanding the customer's value chain. Mm-hmm. I find it's very helpful to understand where your product fits into how they make money and how they conduct their business as well, because that's going to give you a deeper understanding of the business need that you're driving. So that's the first one that comes to my mind when I think of what benefits or what sort of analytical activities benefit from win-loss or additive to it. Ellen?
I have two that come to mind pretty readily. The first one is the Boston Consulting Group's model. And for those who aren't familiar, just go look it up. It's the BCG. But what it does is it gives you a share of market relative to all the players and what's happening with it. Are they growing? Are they shrinking? Where are they? And that's a really good place to start a lot of times with win-loss analysis. Just to kind of show this is the playing, this is the battlefield that we're operating in. I like to use that one if it's appropriate, if we have, a finite number of competitors, and it tells the story based on what the customers have been telling me. That is the important thing. Don't think, oh, what analytical tools should I be using? Think about, what is the story I am learning? How can I best tell the story of what I am learning in a way that is clear and concise for the customer to understand it? And so this is the other one I bring up, which I know everybody hates, but it's very handy at the end of the win-loss analysis to say, now based on this, these are your strengths, these are your weaknesses that we're noticing, that the customers think you have. And you might do it by product line if you have enough information. You might do it as a company as a whole. It just depends on, once again, the story the customers have shared with you. And here's your opportunities. Here's what they're telling us you should be doing that you're not doing today. And here's the threats. This competitor here, you're losing to more and more. And here's why. You can do something about it. Or maybe you can't. Maybe you need to consider acquiring somebody or getting out of this business. I hope that helps.
Great. And we have a couple more questions. One is from Brenton. On large size enterprise deals, more than one persona is often involved in making the final decision. Can you talk a little about when it is beneficial to engage multiple personas from the same deal for interviews?
That's a good question. I get it all the time. As a consultant, they just want you to talk to one, and because they're trying to save money. But what I'll do sometimes is I'll say, okay, I'll give you guys a good deal. Why don't we get two of you on the line at the same time? So let's say this is a tech company. So I'll say, who is the person who's like the project manager for the deal? And who's the person who's kind of like, so that's a business perspective. And who's the person who would have to use this, a director and above? Why, maybe we could get the two of them on the call at the same time. And I just did this last week, in fact, with a customer, and it was such a good idea. And I can't take any credit for it. It was actually the salesperson who made the recommendation. These guys are joined at the hip. And I said, fine, we'll take them both on, but the call might take a little longer than a half hour because we have a couple of people on. And we got so much good competitive intelligence from that call because they bounced off each other. It was great. So I think it's very worthwhile keeping in mind personas, but also the person that's the decision maker is usually not the user. And so you want to have both perspectives, ideally, right? And you don't get that usually from the decision maker. And often that's who my customers want me to talk to, though. And so I'll end up having to say, okay, who is the user we can talk to? And I'll hook them up with the product development person within the company to talk to later on. And that's worked out pretty well, too.
Yeah, I absolutely agree that the value of getting perspectives from people in different roles, both in terms of making the business decision about who to buy from, but also will have different roles and responsibilities within their existing value chain to get value from whatever it is they're purchasing. They may have vastly different perspectives on what strengths and weaknesses are and what matters. So, if you're talking to someone from a procurement group, they might be very, very focused on what was the ease of our process of, did you come back with a bunch of red lines? Does your pricing align with our procurement goals? Do you offer flexible payment options, that sort of thing? And the end user might be focused on feature functionality, and they might come to very different decisions for themselves about who is the best option for the organization, based on how they're interfacing with you. So I absolutely agree that when you can get multiple personas, and maybe I get this more often because I am free. So
Yes.
so maybe that's a benefit of having the internal group do it. And you know, but I absolutely agree with you. We get great competitive intelligence. I actually try to do something similar inside of the organization as well. So, you know, obviously I like to talk to the rep. If something interesting comes up, I'll also search out the sales engineer. Maybe I'll search out someone from our legal group who was involved in helping make the deal happen, and get an idea of, you know, okay, what happened here. Going all the way back to our questions and conversations about bias and things like that. You know, I can think back to some of my times in early doing win-loss earlier, where, you know, the rep would say, you know, for example, we lost on price, and then you talk to somebody from the bid team and find out, like, hey, these guys did not understand the customer's needs at all, and so, you know, that gives you that view that, okay, well, the reason why we lost is not really why we lost, and the issue, you know, what we need to do to address that issue is something very different from what it might have been if we went ahead with the first thing that we heard.
You know, another point I like to ask in every single one, and this gets to the persona thing a lot of times, is who was involved in making the decision at your company? Who was involved? And then after they tell me who that is, because a lot of times they'll use words I don't understand, acronyms or something, and I'm like, okay, so what do they do? You know, so I have an understanding of that. And then, and what was your role, the person I'm talking to? Almost always they're a key influencer, I've noticed. They're usually not the decision maker, which is great, actually. I get better perspective. And then I will ask, and who carried the most weight? Because that's ultimately what you're looking for. Decision making has become so much more complex because customers are trying to reduce risk. And so they have 10 people involved and really only 3 or 4 care about it, in that it's going to change their life. But companies have started to do that. The other thing you brought up, price. I think this is a really important point to share about win-loss and price. Because you're so right. Price usually isn't the reason you lose, unless you're selling in an area or to a customer who really isn't a good fit for you. And price, they care about that because they're not in your area where you do best. I often ask, how was your decision influenced by price? What role did price play? And I might even say, you know, you mentioned it earlier on in our conversation, and but I really wonder, you know, how that influenced your decision and how important it was. And a lot of times I'll find out that it wasn't that important, actually. I had one the other day tell me, oh yeah, I would have paid $400,000 or $500,000 more per year to stay with your company, but for the fact that you didn't support a certain product that you need to have supported. And that was a considerable lot more money than they ended up paying, is my point. So you do get to that by just simply honing in on it all by itself.
And Ellen, this is a terrific segue to a question that Cliff Talbot posed when it comes to a product that's a commodity. So I'm actually going to turn this over to Cliff, and because I see he's on audio. Cliff, will you please ask your question?
Yeah, thank you. Can you hear me?
Yes.
Very well.
Yeah, Alan and August, thank you very much for a very excellent program. I have a specific question regarding price. In regard to a commodity area where the product itself is considered interchangeable among the vendors, and that the vendors are all known to each other because of production needs that companies have to be able to be. And those people have been selected in advance by procurement for competitive bidding. You're dealing only with procurement. Rules are that you have to submit a sealed bid. And if you lose and the outcome in pricing is considered confidential, is there a way that win-loss can help?
Let's see if we heard your question right, because you faded in and out. It sounds like it's a commodity item, it's an RFP, the answers are sealed, the customer can't share with you because it's probably government or some area where you're not allowed to have that opportunity. Is that what your
Right.
question is, Cliff?
That's correct. Matter of fact, on the nail head, it's actually a case where government is the buyer
Right.
and you have their rules to deal with, and it's product which will have application across a broad population of ultimate consumers.
Okay.
So there's high volumes of product involved.
Well, I think what I seem to recall Rich Caldwell tells me he does. That's his space, so I will draw on him. And if he's here, I'd love for him to just give this answer. But is he here?
No, he's not, I'm afraid.
Oh, okay. Yeah, because they do those black hat reviews. And that is where you go into the customer after they've already made their decision. Now they're using the product and ask them, how is it going? And you can ask them all kinds of questions then. And they will tell you lots of information. And that's how you get around that, is according to what he was mentioning. I don't do the black hats. I'm not in the government space so much. I'm more in the commercial side. But he said we learn a lot of stuff from those black hat reviews. And that's kind of more along the lines of customer satisfaction, I guess you'd say. So it's after the big been awarded, and it could be a commodity item, it could be any item, but just how's it working out for you? August, what have you had any dealings? Because you've been.
Yeah, so I've had some experience dealing with exactly this scenario. And the black hat exercise is a great option to get deeper insight into that. Sometimes you might have to be a little bit more creative in terms of what sort of primary you're doing and establishing relationships, because this is a government situation that I came up with this. And as you build relationships through, in my experience in particularly selling to the federal government, as you build relationships with executives in those agencies through professional associations, you do begin to get insight into what criteria went into the decision. Now, one of the things in my experience too is actually the process requirements for government buyers. And Cliff, we didn't mention if this was state and local or federal, but certainly, many of the opportunities that I've been involved in have almost exclusively been at the federal level. Their requirements to publish their decision-making criteria are really quite thorough. So, the good news is, going in, you have a great idea on what is the basis for which they're going to make their decision. And then, Ellen, to your point about, the methodology that particularly Rich employs and other people who do black hats after the fact, going in and getting information about how's it going, and maybe getting some of the information that might have been prohibited during the procurement phase or immediately after the procurement phase, that people are more willing and ready to share at that point when they're actually using the product or the service or the commodity and it's in place.
And as Parmalee was just saying, there's the Freedom of Information Act, but also along with the Freedom of Information Act is the freedom of the company to decide what they want to share. They can scratch out whatever they want. And so sometimes the stuff that you wanted to read isn't there. So has that been your experience, August? I don't know if you've done a FOIA. I'm guessing you probably have, though.
I've done a share of FOIAs back in the day, and I've done I've applied my clairvoyance and my ESP skills to trying to assess what might have been redacted right there as well.
Yeah. So.
Perfect. Well, we're winding down now, and we do have if we have time, we can maybe stick around for one last question that was posed. But I do want to thank everybody, in particular August and Ellen, for sharing with us your experience and wisdom, and as well as people who've also shared via chat, your experiences, your insights, and your questions. It certainly has enriched this conversation. And for those of you who would like to stay in touch with August and Ellen, here are their contact information. You see phone number, email, as well as Twitter. And so follow them on Twitter. They are very, very active on social media. And in fact, I would say that, there are also fantastic ways to find out what's going on in the CI space, because they're up on it. And so you can never go wrong by following. And so with that, I do also want to mention our next webinar, which will be on competitive intelligence management models. And we're going to be talking with Elise Nockels from Tanium and Tim Kindler, Ernst & Young, and they're going to be bringing in their experiences along a continuum of different companies. And so talking about which models might be appropriate for certain situations, and as well as the benefits and pitfalls and so forth. So please join us on Tuesday, July 23rd. And we'll also post the registration link on Twitter and our LinkedIn group, as you can see down below here. So stay tuned for that. And for those of you who are also subscribed to our newsletters, also get a notice with this event as well. And so thank you all for joining us. And I am going to read one final set of questions from Guy. If August and Ellen, would you stick around to answer those?
Sure.
Which is great. And I know people have to drop off, so we are recording this session, and so you'll have a recording of August and Ellen's response. And so Guy asked, do you offer some incentive to the people you interview for their time? And then second question is, does phone interviews, is that the best way to conduct a win-loss analysis as opposed to face-to-face or online questionnaire? Any thoughts?
Well, I have noticed that it's useful to have some money behind it because you value their time. On the other hand, what I'm also noticing, though, which is kind of interesting, it isn't just the government. A lot of companies don't allow their employees to take money. Amazon gift certificates. So I have to actually say something along those lines in my note, that we value your time and would like to offer you $100 Amazon gift certificate if your company permits this. I have added that in now because I've had too many of them say, I don't know what my company's practice is. I don't want to deal with it, but I'll do it. I'll take it. What was the other part of your question? Old age.
Well, also you've been throwing a lot of questions your way as well. So the other is, is the phone interview the best way to conduct win-loss analysis as opposed to face-to-face or online questioning?
Well, face-to-face is great if you can actually get people to agree to it, because you can use Zoom like we're doing right now. But some people aren't as comfortable with that because it's a one-time shot. And so they would rather it maybe be Zoom, but just be audio. But I let people decide what they want to do. I notice with sales more often, they might want to have a person-to-person, call where we see each other, but the customers might not, but you just give them the option. I mean, I think it's kind of nice, but I have noticed in the both customers I have right now, none of the customers have wanted to do a face-to-face call with me, like on Zoom, but they all like to have Zoom rather than a phone call. That's the other thing I notice. The other thing I do, though, in case Zoom is misbehaving or it's difficult, is I always give them my phone number. In the Zoom invitation, in case something doesn't work, because I really want things to work well and be smooth, not have the communication medium be an impediment. But my calls are all over the world, so the phone bill would be pretty astronomical too. So there's that. What about August? Well, August had some really good points in our previous discussion about this.
Yeah, so real quick on the point about incentives, most of the customer base that I'm dealing with just really are not interested in that because among others, I'm dealing with a lot of government contractors. And so, downstream in their value chain, they face all sorts of regulations around it. So we actually don't offer any incentives. We're incredibly grateful for the time that they're giving us, but it is time that they're giving us. And we acknowledge the gift that it is profusely when we get the chance to speak with them. In terms of the medium of the conversation, I love face-to-face when you can make it happen. It is very, very rare, even if you're in the same metro area with someone. Oh, heck, sometimes even if I'm in the same building with somebody, it can be hard to make face-to-face happen. And so more often than not, it does go to some sort of audio platform. Internally, we use Skype for Business. And so our internal conversations are usually on Skype for Business. I have my own Zoom account for outside conversations as well. I just find that's a better platform, whether it's just audio or audio and video or audio, video and web together. That's a little bit of my own competitive intelligence back for the Zoom people, that their product's a lot better than Skype for Business. And I'm just going to leave that there for now. One of the things kind of related to this, Ellen, I think you were hinting at this because early on in the call, you mentioned that it's really difficult to get people to schedule things. Scheduling is the bane of my existence. I despise scheduling things. And it's such a large part of actually getting the win-loss conversations to happen. So right now I'm in the middle of this sort of like extended experiment with two tools, Doodle and Calendly. So if you're trying to schedule something with me and if you're outside of my organization, I'm definitely going to steer you into one of those products. I think Doodle is kind of better suited if it's multiple people trying to find a time that works for everyone. And Calendly is really quite excellent if we're going to have like a half hour or an hour conversation, and it can happen anytime on these days that I happen to be open, and I can just like throw that link to you and you can choose the time that works for you, and then that automatically gets added to my calendar. When it works, that's great. The one thing I will say is some people still fall back on that muscle memory, just like they don't want to work in a Google Doc, or just like they don't want to collaborate in SharePoint, they want to do it via email. And so some people are just like, no, I want to do this the old-fashioned way. And you really have to accommodate the other person's, particularly if you're trying to get a customer's time, you have to accommodate their preference.
You sure do. And what I end up doing is I'll give them my schedule of availability, the best that I know it, for the next 2 or 3 weeks out in their time zone. Very important, in their time zone.
Yes.
And it is a pain in the to have to do that with every single, oh, they're Pacific. Oh, they're in Central. Oh, they're in East. Nobody's in my time zone. I'm in Denver. There's nobody out here. So I'm continually in someone else's time zone. And if that seems to work, it makes them feel good, but I would much rather do a Calendly. But I just don't know how receptive my audience would be to setting up an appointment on Calendly. I think over time, that will be the way it's done, but I don't think we're there yet. I think a lot of people aren't quite there yet. So I the old-fashioned way, and it takes more time, and I really wish it didn't, but that's life. That's the business we're in.
That it is. I absolutely agree. It's probably where we're going, but it's going to take a long time for people to adapt to that, because people get the link and they're like, I don't know what to do with this, or I just want to do it the old-fashioned way because it's what I know.
Yeah.
Well, thank you both for your insights, and then also for staying an extra 10 minutes to wrap up our questions. So we really appreciate that. And we have thanks rolling in, so thank you all very much for participating. And I have one final note, is that probably says face-to-face does provide more information, but costs a lot more trade-off. Right?
Yeah.
To think about. But yeah, thank you all for bringing your expertise to our audience. And this recording will be available. I will post this to our newsletter, as well as to the archive section of the website of the Council's Competitive Intelligence Fellows website. So please be on the lookout for that. So thank you all. As we wind down, I'm going to stop the recording now, and we will see you on Twitter and on LinkedIn.
Thanks, everyone.